Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video, I'm going to go over the trades I executed for July 15th and July 16th. Yesterday, I was the on-call engineer at my job. I was a little bit too busy to make a video, but here we are today. We're going to make up for it, and then we're going to talk about all the covered calls and the cash secured puts I executed during those 2 days. So let's dive into it. First thing I like to talk about on my channel is my Robinhood account, more so just to understand the amount of money I'm dealing with to make the amount of premium I'm generating every single day. So with that being said, I have $169,299.87 in my account. Let's head over to the Excel spreadsheets where we're going to talk about the individual strike prices I chose and how I chose my covered calls and cash secured puts. So let's begin. All right, now that we are at the spreadsheet, let's talk about July 15th. Ripping the band-aid off for July 15th, I made $462 of premium. That was a pretty substantial day for me, usually higher than my average. I'm usually averaging about $300 a day. So when that happened, I was pretty stoked about it. And I think the one major difference I did is I did a cash secured put on an underlying, like one specific stock, and I chose Oracle. And then that netted me about $260. So when Oracle opened on the 15th, it was trading at $231.76. And I chose a strike price at the 230, being relatively aggressive. I was thinking Oracle has some pretty good momentum going up, so therefore I can choose a strike price that's really close. And the one thing I don't like about running options on an underlying is they're usually a week long. So I have this money tied up for about a couple of days. But for $260, I made the trade-off of, hey, I'll just lock in this number now and then just wait for it to expire on Friday. At the end of the trading day, At the end of the trading day on July 15th, Oracle closed at the 235.01. So it's blowing way past that cash secured put. So it would have to go down to 230 for my option to get assigned, but it's going up. So everything is going according to plan. And then, yep, like I said, $260 gain. For QQQ, I ran a cash secured put and I chose something that was pretty much at the money. The QQQ opened at the 558.78 and then closed at the 556.70. So I did two cash secured puts. One at the 558, one at the 559. So basically guaranteed these options running. So instead of me having to like just shell out the money and buy the stock, I just decided to do cash secured puts at the money that we're going to actually execute by the end of the trading day. So that happened. I got assigned 200 shares of QQQ, one at the 558, one at the 559. And then during that process made $72 and then $130. So that was all according to plan because I was a little too cash heavy and I just wanted to get assigned some shares. Yes, this may have been a little bit of expensive at the time. However, that really isn't a worry to me because I'm wheeling and dealing these options all the time. If I buy this high point 2 weeks from now, that's going to be the lowest it's been in 2 weeks because market's relatively bullish right now and everything's going really good. So I decided to take advantage of it and then just bought in at that premium price. And then moving on to July 16th, ripping the band-aid off, we made $371. And I did that by accomplishing a couple of things. So I ran two covered calls against the 200 shares that were assigned the previous day. So then I made $41 off of one of the options and then $74 off of the other. Both expired worthless by the end of the day because I chose a strike price of the 559, 558. Whenever I run my covered calls, I do not choose strike prices below my cost basis. For me, that's the only way you can lose money running this strategy. So therefore, I just stick to my strategy. Money wasn't necessarily too fantastic because the QQQ opened at the 554, but I'm going to take $41 and $74 any day of the week, no problem. And then I still had some like margin collateral available at the time. So then I ran a cash secured put against the QQQ. I chose the 555 strike price. Market for the QQQ closed at the 557.34. Expired worthless, bagged $71. Didn't have to use my own money. This was just strictly margin used as collateral that I didn't have to pay interest for that then paid me money. So I was pretty happy about that. So I usually like to do that to squeeze out a little bit more money in my portfolio. I might incur a little bit of margin cost, but for how much premium I'm making, that cost is justified. So that's just my thought process. And then lastly, I ran another Oracle cash secured put. The premiums were way too juicy for me to pass up again. So I chose a strike price of the 232.50. And when the Oracle shares opened, they were at the 233.69, closed at the 241. So they're booming. So this was definitely a good judgment call. Made $185. And currently this cash secured put is active until Friday because all of my Oracle cash secured puts and calls are going to be active until Friday. So some of my capital is tied up, but for how much premium I've made for the short amount of time, I think it was worth it. So after 2 days of trading, we've made, I think was at somewhere around $800. That was a pretty big haul. So I was pretty stoked about that. We've already hit the 4-digit club after 3 trading days. That is fantastic. And that's exactly what I want to see in this account, in this portfolio. So now let's head over to the other side of the spreadsheet where I look at the holistic picture of the last 65 trading days. And we're going to make a determination. Is this relatively successful? Is this something that you can adopt into your own investing strategy? So let's head over there. You guys know me. This is the favorite part of my videos, is tracking the progress and see where we can make improvements. And let's get going. So as I showed on the other side of the spreadsheet, we made $462 and then $371. And we can slowly see that my account is growing. And for the 16th, account is at that $169,281.01. And we've hit the $20,000 club. We finally passed the $19,000. Now we're at $20,352. We are doing fantastic for the 65 days of trading. So I'm pretty stoked about that. And if you look at that as a percentage, we're at 15.71%. Also very stoked about that. Looking at the trade win percentage, I'm winning 98.46% of my trades. I've had 64 winning days, 1 losing day, and we've had 65 trading days total. I'm averaging about $313 of premium per day. And if we look at the average weekly premium, I'm making about $1,453.73 a day. And then for the average monthly premium, this is going to stay the same until July completes, but it's at that $5,651.88. Looking in the yellow section here, guys, we have our estimates for this project based off of the results of the last 65 days. So what I did is I took the average weekly premium, multiplied it by 52 to come up with this $75,593.70. And I think that's a fantastic number for year one. I'm not going to hit that $75,000 this year because I started trading these covered calls and cash secured puts about 3 months after the start of the year. So it's probably going to be closer to about $50,000 with the current trajectory. And right now I'm averaging about 52% a year. So that's fantastic. And what I've noticed from most of my trading, some days I have good days, some days bad days. And then right now the range is about 49% to about 60%. So that's pretty good. Let's talk about the why. This is the whole reason why I started this options trading in the first place, is for this section here, the estimates. These may not be exactly accurate. And like most people point out, these numbers seem a little bit too unrealistic based off of my current account's performance. I'm in a bull market right now. We will see how I perform in a bear market, but I will always say this: a man can dream, and let's continue forward. For the end of 2025, I theoretically should make about $55,241. That's counting my $20,350 plus whatever I plan on making the rest of the year with the last 24 weeks left. I'm probably going to have to pay about $19,000 in taxes. I'm a high income earner, so I'm just going to get wrecked at this point. So it's going to be around that 35% bracket. But if you guys come up with your own tax brackets, you can calculate your own number. I'll try to add the link to my spreadsheet so you guys can use it if you want. For the end of the year value, after taxes and all of my estimated income, my account should be valued somewhere around $182,638. When it comes to taxes, I'm just going to leave this money into the account until it comes tax time, like April 15th. So I'll probably start looking towards pulling money out roughly March 13th. So in that time, I want to keep the money in the account, continue to keep running options so I can gain money with that higher sum of money in the account, so that come tax time, I can maybe make a little bit of money. Well, ideally, I'm kind of shooting for this 2030 to make a judgment call whether I would like to continue working or not. If this project maintains its velocity and its trajectory, I theoretically would be making about $300,000 a year off of premium, and I would have to pay about $105,000 in taxes, but that's a good problem to have, especially with my already high-paying job. So that's a good problem to have. And the end of the year account value would be around that $776,000, which would be fantastic. And this is, I say this in most of my videos, even if 5 years from now, these numbers are half, like even if I'm making $150,000 in premium, that would still be a win. and then the account being at what, $350,000, $375,000, that would still be a win. Even if it's at a quarter, if I'm making $100,000 a year running trades for 20 minutes a day, and then the account is at whatever 1/3 of $776,000 is, that's still a fantastic, maybe 250,000. That's still a fantastic number to have, guys. And then let's play the dream scenario. Say 2035, I grind it out. I'm probably going to end up having to work until 2035 because me and my girlfriend probably going to get married eventually, and then we're going to have kids. And to prepare the kids for life, it's better to have more money. So ideally around this 2035 range is when I would ideally like to retire, but I would be making about $1.2 million in premium. And then the account would be valued at $3.3 million. And like I said, at the 2030 numbers, even if at 2035, I'm making half of 1.2 million or a third of 1.2 million or a fourth of 1.2 million, or in my account, same scenario, I still think that's a win in my book. This is disposable income that can help. If it's not going to help me retire faster or like get off of my W-2 income, it's going to be able to make my life a little bit more bearable. I would be able to buy the truck I want, or I can, set aside a fund for my kids if we get to that point, So with money allows you freedom, because the way I view money is not something you use to pay bills. Money is just like getting your time back. The more of it you have, the more time you can save by not doing the things you don't want to do and then doing the things you want to do. So time for money for me is just like a time equation. The more money you have, the more time you can save and then do the things you actually want to do. But let's play the dream scenario. I work until 2058. I would be making close to $1 billion a year in premium. That seems way out of my league. And then the account would be valued at $2.5 billion. Like I said, a man can dream. We'll see if we ever get there. Even if we get half of that or 1/10 of that, that'd be still a win in my book. Heading over to the weekly tracker for the week we are currently in, we're already at that $1,183. So we've hit the 4-digit club after 3 trading days, and we will see how far we can go with the remaining 2 days. I have most of my capital tied up, so I'm pretty much only going to be able to run 2 covered calls on QQQ and then 1 cash secured put on the QQQ as well. Maybe I might run one on the SPY depending on how much margin collateral I have available. So we will see. If we look at the monthly tracker for July, we are already at $3,396.52, and that is progressing as expected. So we are roughly at the halfway point in the month, and we're at 3,000, we'll say 400. Maybe by the end of the month, we'll be at 6,800. So that would be quite nice. And then for the yearly tracker, still have not hit 1 full year yet, but we're at $20,352.15. So yeah, guys, that wraps up the metrics portion of this video. I'm definitely stoked with how the progress is going. The fact that we hit that 4-digit club after only 3 days of trading this week, I'm pretty happy. We are already 2 weeks in a row in the 4-digit club, and I'm hoping for the rest of 2025 we can definitely maintain that trajectory. So let's head over to Robinhood. Let's take a look at what we might be dealing with, some of the trades for tomorrow. We'll talk about the QQQ covered calls. We'll talk about the QQQ cash secured puts. We might look at the SPY covered call or the SPY cash secured put. And I might even have a little money left over. So if we have money left over, I might run another cash secured put, another underlying, probably thinking maybe Amazon stock or NVIDIA. So we will see. All right, guys, back to the Robinhood account. Let's go to QQQ. Heading over to trade QQQ options. I am going to beat the dead horse for any of my returning subscribers. Sorry, but not sorry. Got to pay it forward for the next generation. See this buy call. Don't ever do that. 90 to 95% of investors that buy call options will lose money. So I highly recommend don't doing it. Do the safe investments like we're doing. Do the covered calls and the cash secured puts. If you do this, you're going to have a better time, because buy call, yes, you can make a lot more money, but you can significantly lose a lot more money if you don't really know what you're doing. So until you're have a track record of running good covered calls and understanding the market, understanding the specific stock or underlying that you are trading, like SPY, QQQ. For me, I'm familiar with Oracle and Amazon shares. Until you're familiar with how those funds operate, how those stocks operate, what usually happens at earnings, understanding the fundamentals for those stocks. If you know that, sure, invest and do the buy calls. But if you don't and are kind of want the easy button money, just do sell calls. It's easy. So we are looking at QQQ for covered calls. Current price is at this 556.54. So because when we talked about on the spreadsheet, I bought 200 shares of QQQ, one at the 559, one at the 558. I will not choose a strike price below those two numbers unless, you know, I'm going to own these shares for a week or 2 weeks and the premium is still bad. So let's take a look. For tomorrow, if I run a covered call at this 558, I would make $136. And if I were to run a covered call at this 94, or this covered call at the 559, I'd make $94. So just running these two options, I'd make somewhere between $230. That would be a great number. Usually when the market opens, it's going to be probably 25% less that, if not more. But let's take a look at what these deltas would look like. Because usually I like to trade the delta somewhere between the 0.2 or 0.3. So the fact that this delta is a 0.34, there's a good chance that this might execute and get assigned away from me tomorrow. I wouldn't necessarily hate that. And then let's see, for this 558, it's a 0.44 delta. So there's a 44% chance that this might be taken away from me. Ideally, I don't want them to be assigned away. I just want to keep, you know, wheeling and dealing premium. But if they get assigned away, no big deal. I'll just rerun some cash secured puts to try to beef up my my share count. That's what I'm going to do for my covered calls. Let's talk about the cash secured puts. So like we mentioned, QQQ is trading at this 556.46, and I probably would trade and get another cash secured put at this 555. Yep, it's a nice 0.3 delta. I like 0.3 is where most of the premiums at. That's what I've noticed, and I usually tend to unbiasedly always choose that type of delta. So 30% chance of it executing. I would lock that in. So tomorrow, just face value, I'd make some around $318. And then depending on how much buying power I would have left over, then I might run a cover or cash secured put on nvdy, Amazon, one of those two stocks. But yeah, guys, that pretty much wraps up what I plan on doing for tomorrow. Hope you guys enjoyed the video. Let's stay locked in. Let's stay disciplined. Let's stay harvesting. Matt out. I will see you at the next video. Let's go.